Hey everyone, this is your weekly market outlook for the 11th of March 2024. So this is the second full week of trading in the month of March. Let's get started with a quick recap on last week. Very important data that was released in terms of the US employment sectors there. So we do see the NFP numbers for the month of January. This was actually revised down from 353,000 to 229,000. Then for the month of February, we got 275,000. Obviously, this is beating the market consensus of just 198,000 jobs added into the non-farm sector there. So yeah, just looking at that NFP number, it might seem positive because we got a little bit of a revision down and then the number was actually positive. But I think the game breaker here is obviously the unemployment rate. The unemployment rate was expected to remain stable at 3.7%. This one actually jumped up to 3.9%. So by just looking at that unemployment numbers there, it kind of trumps everything else, right? It trumps the NFP number, even though it was upbeat, it was above consensus. We got the unemployment rate that jumped up from 3.7% to 3.9%. That's number one. Number two, in terms of average hourly earnings, we got a previous revision as well from 0.6 to 0.5. And then the actual number came in at 0.1% growth. So that's a lot less than the 0.2% drop market was expecting. So again, it's not looking that great coming out from the employment numbers there, especially if we take a look at the average hourly earnings. That points out to a potential softer inflation that's actually going to be released tomorrow from the Bureau of Labor Statistics as well. So yeah. Last week, a lot of stuff was happening. We've got the ECB, we've got the FOMC, we've got Jerome Powell testifying and whatnot. It doesn't do much at this point in time because, just by looking at the higher unemployment rate, I think the market sentiment is pretty much negative at this point in time for the US dollar. So again, going into this week, obviously we do have a little bit of a daylight savings in the US as well. So if you're not in the US, you need to adjust your time according to your region, so make sure you do that this week because otherwise you could actually be late for the CPI number that's actually going to be released tomorrow. So let's take a look at the consensus for the CPI. The headline inflation is expected to remain flat at 3.1%. Again, it's expected from potentially from the softer average hourly earnings that we got. They could actually point to more of a softer inflation as well. So 3.1% is the current consensus. We might actually get a little bit of a lower CPI number. It could come in at 3%. But I think the main focus would definitely be on the core CPI number. The core CPI number here, again, is expected to drop a little bit from 3.9% to 3.7%. So if we do see the core inflation drop by 0.2%, that could again be weak for the US dollar. At this point in time, I think the market is anticipating a little bit more of a softer inflation coming out from the US there. Other than that, we have the UK GDP. Just a little bit of a note as well. Japanese GDP was released. The final GDP for the quarter was released this morning. Came in at 0.1%. Again, it was lower than forecast, but since it's still above 0%, it saves the Japanese economy from going into a technical recession at this point in time. Other than that, we have the retail sales number as well as the PPI numbers coming up from the US this week as well. And then we have the preliminary UOM consumer sentiment, which is going to be impactful because the previous one, we do see a little bit of a drop there in terms of consumer sentiment there. So again, these are going to be the data for this week. I think a lot of the action is probably going to take place tomorrow during the CPI number. And again, in terms of the direction where the US dollar is going to take, we already have half of the answer from the employment numbers, which is not looking that great because of the higher unemployment rate. So a lot of attention is definitely going to be on the inflation number tomorrow, whether it's actually going to be a softer inflation. If we do get a softer inflation, we know that the FOMC is not going to act on the 20th this month, but they might actually change a little bit of their tone there. They might actually come up with a statement that, yeah, you know what, unemployment rate is on the rise, inflation is cooling off. We might actually start looking into potentially cutting interest rates as planned this year in 2024. So I think we're just waiting for that confirmation from the FOMC this week. All right. Jumping on to the technicals, we have the Aussie USD here. Now for the Aussie USD, we do see a little bit of a change here. We do have a little bit of a change of character that we see here. Still bound by the fair value gap that we have there, which is about 66 to 66.50. This is still going to be your main resistance zone for the Aussie USD. We might see a little bit of a correction, but at this point in time, it does point that 65 cents is currently a very strong level that could potentially hold further drop in the Aussie USD. So we do anticipate a little bit of a correction, but whether or not it could actually continue to push lower below 65 cents, that would really depend on whether or not the inflation tomorrow from the US is actually going to be above consensus, or is it going to be a little bit softer. Same situation with the Euro USD here. At least with the Euro USD, this one has kind of cleared off that main resistance at 1.0850, 1.09. This is currently pushing up higher. We do still find a little bit of resistance at 1.0950. Not a lot of action has actually taken place post NFP on Friday. We do see a little bit of a knee-jerk reaction to the upside, but the market kind of come back to the initial range just because the pair has actually started moving before the NFP is released. So for the Euro USD, we do have a little bit of a major change of character that has happened as well. Prices continue to push and maintain a position above 1.09, at least for 2 days, on Thursday and on Friday. At this point in time, we also see that transition above the Ishimoku cloud. So this one here has the potential to continue to push towards 1.1 at this point in time. We're currently positioning the Euro USD as a potential trend change that we have seen, because the resistance at 1.0850, 1.09 has been cleared. Now we are anticipating this level to be the support level for the Euro USD going forward. With the Pound USD, very similar situation, much stronger gain here. We have now reached 1.2850. The movement on Thursday and Friday last week, this one has pushed through beyond the order block at 1.2750. It does continue to push higher. It maintains a stronger position. So we're right now, previous resistance that we have, which was the order block at 1.2750, that's going to be our immediate support level for the Pound USD. Do see a little bit of a rejection here coming in at 1.2850. We anticipate a little bit of a pullback. It could bounce off 1.28, it could bounce off 1.2750, but eventually, just looking at the current movement on the Pound USD, we anticipate the Pound USD to continue to push higher at this point in time, potentially above 1.2850, reaching 1.29 in the near term for the Pound USD. The dollar Japanese yen, this one here is still hanging by the thread as we're speaking right now. We do note a hidden bullish divergence that's currently being formed from the February low to the current low that we have here. We do see the RSI at this point in time creating a much lower low, but if we take a look at the price movement here, we still creates a higher low. So this is a potential for a hidden bullish divergence as long as price does not touch 146. So that's one criteria that needs to be met here for that hidden bullish divergence to happen. But for now, we're still looking at a potentially stronger support 145, 146 to still hold the dollar Japanese yen. For as long as price does not touch 146, we should anticipate more buyers coming into the dollar Japanese yen at this point in time. Now again, immediate resistance, since we have fallen below 148, immediate resistance will be at 148, and until we move back above 148, it's very hard to tell what's likely going to happen with the dollar Japanese yen. We're not really positioning ourselves towards that 152 gain at this point in time, just because the pullback was so deep at this point in time, 78.6% in terms of pullback on the dollar Japanese yen. So again, I think it's safer to wait for that push above 148 to confirm that, yeah, carry trade is still there. But until that happens, right now for the dollar Japanese yen, it's a little bit risky, especially leading up into the inflation number tomorrow. If the inflation is cooling off, there might be indication the FOMC could cut interest rate, and that again could weigh in on how the interest rate differential is going on between Bank of Japan and the FOMC. In the long run, it wouldn't matter, but in the short run, because the Bank of Japan is about to pivot, and then at the same time, if that happens with the FOMC starting to potentially announcing their rate cuts, that could create a little bit of a short-term strength, a short-term gain for the Japanese yen. That could push the dollar Japanese yen a little bit lower. Right, finally we have gold, and obviously with gold here we have broken through a new high in terms of historical high. Yes, we are at that historical high at this point in time. We also have seen the the break of structure that has happened, the movement last week as well, as price pushes beyond 2,144. Right now it is finding a little bit of resistance at 127.2% Fibonacci extension at 2191. Beyond this, I think a lot of traders are probably going to be targeting 161.8, which is at 2250. Support wise for gold, there's actually a lot of support, a lot of strong support here. In fact, with the run up in the month of March for gold here, we have formed two fair value gaps. Now obviously that fair value gaps is going to be located at 2100, and then below that is going to be between 2060 to 2080. So again, there's a lot of support here for gold. We might see price pull back a little bit towards 2150, 2144, but any bounces off that, I think there's a lot more potential demand for gold that could actually lift this higher, potentially to test and break 2200. But again, ultimately at this point in time, because we are going through a historical high, we can only do so much in terms of projections, and that projection is probably going to run out of space if there's no correction. That's going to be limited at 2250 at this point in time. All right, so with that, good luck with your trades, and I'll see you soon.